we've gone through some of the bases. We are going to another. We look at long or short.
Okay.
Long or short, other types, and calculating profits and losses.
Okay.
So here we look, when we say long, another word for it is buy.
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 Okay.
When we say short, another word for short is selling. When you are selling, so it's old terms, long or short, or professionals, that's their language. They say, I'm long in Euro USD. I'm not short, I'm not selling. So today we want to uh, lay hands on those areas. So the basic idea of trading the market is to buy low. You buy low
Okay.
and you sell high. Just like our business women, when they know that this commodity is rampant, is much in the market, they know that that is the period of plentifulness. So plentiful, they now get some, preserve it, waiting for when there will be scarcity of that particular product. So in market also, there's you buy low, you sell high. But this principle, it's only for the basis, for the beginners. Because there are some times it will be up, and you see that this is a breakout towards uptrend continuation, then you have no option than to buy. But your buy must be with stop loss. Because if it reverse, the losses will be much. Because it's in the uptrend, and you see that this uptrend want to continue, you are now banned from the pullback. But at times of pullback, they have reached their final stage, and if the market makers now want to put all those people that have buy there, they want to put them under. That's what always happen. So market will shift from the buying uptrend to the opposite, selling downtrend. So now we know that we buy the currency pairs, and which example I gave us yesterday. So in the long, you can buy, you can say, okay, I will buy this market from the low, then wait till it has reached the final point that you know that it will turn other way round. Why short? When we go short, it means we are selling the market, and so we want the market to fall so that we can then buy back. So what I'm saying is that when we go short, we are selling. We are selling the market. So we want the market to fall. When it now fall, you can now take position of buying again. So it's vice versa. So we have different types of orders, and I will be showing you from this place, from buying. The orders, we have different orders. So if we look at this new orders now, is an order on its own. When we click it, it gives us this dialog box. From this dialog box, from broker to broker, the way they design it may vary, but they mean some things. They mean the same thing. Only some aspect may not be included in their own.
So I'm using like bars.
Yeah, exactly. That they are different. So your symbol, the market you want to sell or you want to buy, if it is Euro USD, you change it from this also card to Euro USD. This is where you now pick the option. You scroll your up to see. So from there, you can now pick the right pair because it belongs to major Euro USD. I will now come to You can see the exotic I talked about.
Mm.
You can see major and you can see minor. They call it minor, but it's still we call it crosses. Why are they crosses? Because it doesn't have USD.
USD, yeah.
Yes. So some call it minors, some call it crosses, and these are the three types. So now with Euro USD we are using as example. We'll click. So this is Euro USD. I'll just click on it. Now type of market. We have different types of markets. That's what we are talking about. Other types. We have pending order and market execution. What is the difference between pending order and market execution? Market execution is instantly. You want it to take effect immediately. While pending order, when you click on it, you say, okay, when you get to this also price level, I want you to pick my order and move forward. And move forward. So we have limit entry order. That is what they call buy limit. So these are what we have: buy stop limit, sell stop limit, buy limit. They are different from one another. The combination of these buy stop limits is individual here. So combining buy stop and limit together now give you this one. You have redefined.
Okay, buy stop.
So the same way with this one. And some broker may not have this buy stop limit. They may only have sell stop, buy stop, sell limit, buy limit. But anywhere they have this one is a great opportunity. So now, let's say for this example, buy limit now, we pick it. So we have, I want to buy this market at this limit, at this, if the market is already, let's use Euro USD as we said earlier on. Euro USD for explanation. Let's take the Euro USD. Let's take the Euro USD. This is the Euro USD as we said. So the market now is A. Is A. I cannot take this bar, draw horizontal line to mark where the market is. And I'm now planning, taking horizontal line to say, okay, if this market eventually is able to come to this level, I look at, I've already know my support and resistance key one, major one. I say, okay, when the market can even repeat this place, because anytime it comes to this place, it change position again. It's still well done. So let me now, okay, if it depends on the time frame you are trading. We have higher time frame, which start from 1 hour, 4 hours, daily, week, month. We have lower time frame, which start from 1 minute, 5 minutes, 15 minutes, 30 minutes. So it depends on the, so any whatever is the same rule, the same place. So just the period you get your results differs. So just place this, you can now say, okay, I want to put buy limit. So another way you can see that buy limit, you can right click, you can see buy limit, or use this platform. But this one is instant market execution. This very one is the instant. You can use this also as instant because it's have the option. You understand? If you use instant, you just type your stop loss, the volume, that's the loss size. If you use 0.1, that's what it's saying. So, but if this is 0.1 is the least in this broker, but in some 0.01 is the least. It varies. Some have macro, some have nano, some don't have nano, some don't have macro, some have start. So just know where you start your trading. So stop entering order. Let's now define limit entry order. A limit entry order is pleased to either buy below the current market price or sell above the current market price. This is a bit tricky to understand at the first, but as you are executing it. So let's now explain it this way. Euro USD is currently trading at this value 1.13631. Now, so at that point, you want to go sell the market. So that you are now, as you are selling the market, you are believing that, okay, if it can still move forward, I want to sell it when it gets to 1.1378880.
Okay, yes. Yeah.
That's where I want to. So the difference, you are now target looking for, okay, I want to take my profit at 1.13180. So you now place your entry of sell limits order in such above like this. I can right click. You can see that when I go up
Sell
now,
limit.
it sell limit has gained. But
Yes.
when I was down,
Yes,
buy
buy
limit,
limits.
I can now place like this. When you get here, I want you to, I can shift it to the, when you get here, take my order, and I'm expecting you, if market goes on my favor, to come down. But if not, this is what I can lose. I will put my stop loss up.
Okay.
Stop loss will now be up,
Okay.
not down, because I'm selling. But if I'm buying, stop loss will be down. So, but you must define your pips. You can, you are ready to lose. You are ready to. You have to make sure your losses is not more than bigger than your profit. That should be the rule. At least if I'm ready to lose $1, I must gain 1.5, that is $1.50 or $2. That should be at the back of my mind, and that is where you can be working against your losses. So when we say stop entry order, it's just other way. A stop entry order is placed to buy above the current market price. So the market is going up, but you want, if it will still move up further, pick my order there. That is what we call stop entry order.
Okay.
To continue, current market price or sell below it. For example, if you want to trade long, but you want to enter on a breakout, that's why I say there's some place you will still continue the buy. So I say you that principle of buy low and sell high, that's level.
Okay.
Professionals knows, but the beginners have to master it and note it very well. So now you define it. Then when we say stop loss order is an order that is connected to a trade for the purpose of preventing further losses. That's stop loss, as I told you. That my losses should cut if the price moves beyond the level that you specify. The stop loss should do justice, should cut you out of the market at that point in time. When we say trailing stop is only good much more in a higher time frame. When the market has completed the day, let's say you are trading 4 hours or 1 day, exactly. Immediately that 1 day has concluded and you have made some profit and you want to trade, that is, you want to make sure even if anything fall back, that profit will still be on your side. You are training. The training stop loss order is an order that is connected to the trade, like the standard stop loss. It's like a standard stop loss, but it gives you profit at the long run. It work when the market is moving in your favor. You are trailing it along. You are trailing it along until you get to the point that it will reverse to another level. So, like this place now, you see that this pending order, these are what it has. So, and this level now, you put the price here, the start. But this expiration, it has their own meaning also. GTC. GTC is just, uh, you just know that, okay, I want it to good till cancel.
Okay.
Good till you cancel it.
Okay.
That is, if you have not cancelled it, it will not be cancelled. A good thing, a good till or cancel order is exactly like what he's saying. Good until you cancel it by yourself. So when this one today, which means if that market did not trigger that thing, it should end today.
Okay.
So it saves you because maybe I was on a journey and you did not remember that you placed up market order,
Yes,
any
yes.
order, and it eventually now is in a position that not to be cancelled at all. You did not specify. You did not say it should short market if you trigger and it's now reversed, it will be to your loss. But when the stop loss has been defined, it will save you along the way. So all this one, this is specific. If you take today, this one will not be effective for you to use. But if you pick specify, see that it's effective to specify, okay, for so time frame and so date. Why if you pick specify day, okay, is from this day to this day.
Okay.
So that is all about the other type of orders. So lot size is very important, and I've explained it yesterday, and I've even done some recap about it today. That some broker have nano, micro,
Yes.
mini, standard. So for beginner, I always counsel them to start from the cent. Some even have, so you start from the lowest, which can call nano. You can at times make it nano or macro. Macro is more or less like cent because it's talking of 1,000 so units.
Okay.
So lot size or contract size depend on the type of broker. Some call it lot size, some call it contract size. That is, we are entering this agreement based on this value. What is that value? 0.1, 0.001. It depends.
Okay.
So are quoted in terms of lots. The common nomenclature is standard lots, mini lots, micro lots, and nano lots. Those are the common nomenclature that you can see. We can, so as we move on, I will show us how to know that clearly. So how to calculate profit and losses. And yesterday we talked about P. There's a way you can calculate your P value. So to calculate your P value, let's use this example. Let's say Euro JPY is what we are talking about. When we talk of Euro JPY, I talk of Euro JPY. So we look at it at exchange rate of 100.50. Then I say, okay, at the exchange rate of 131.130, we may neglect this zero because it's pipette. We can add 131.13. So from there, you do the multiplication, there is some calculation, and you now that's your lot size divided by the current value in bracket, then multiply. After getting the division, you now multiply by 100,000. That will let you know what your PIP is in dollar. So vice versa. So the profits, calculating profit and loss, I do advise that you start calculating your losses first.
Okay.
When then work towards how you will minimize your losses. Because when you work on your losses, it will help you to achieve more. But know it at the back of mind that when you release to go, you are planning to receive $2 or $1.50. And when you are able to follow that rule, it will help you to cover a lot of gap in this market and to make you to become a professional by and by as you are following your rule, your trading plans. So such things should be in our trading plan. That if this market will not produce me $2, I will not go for it. Or 1.5. So